Thank you everybody for joining us for the virtual lunch and learn. Thanks for spending at least an hour of your day. We're going to try to get through this presentation in the next 30 to 45 minutes and then leave a little question and answer session for the end. If your questions don't get answered before the end of the session, please feel free to reach out to your sales consultant to get those questions answered, or feel free to reach out to myself to answer those questions as well. For those of you who don't know me, my name is Matthew Sturkey, Vice President of Sales and Marketing with Stone Mill Log and Timber Homes. I've been in this business my entire life, started officially in 1997. Before 97, I was part of the road crew, working in the plant facility. I did some odds and ends, and then came into the sales and marketing department in 97 and been doing that since. We are a family-owned and operated second-generation family business. We started in 1974. We specialize in the design, fabrication, and construction of log and timber frame homes only. So if you're not looking for a log or timber frame home, I hope you get to learn a lot about financing today. But we do specialize in log and timber frame construction only. That is our passion. That's our love. That's what we're the best at and what our focus is. We've built over 2,000 structures for homeowners, for second home buyers, for rental investors, and everything in between in our 47 years of business. The goals for the presentation today are going to be several fold. One is, this is educational. We are not going to be sitting up here giving our sales pitch and trying to put a sales spin on anything. This is about educating you on financing for a log and or timber frame home. Our type of construction is unique. It's very specialized. And so the partners that we have are very specialized in what they do. And so that is the first and foremost priority for today, is to educate you on financing for your log or timber frame home. The second thing is we want to get you exposed to some of our partnerships that we have within the industry. Building a home is a partnership between us and you and your general contractor, or between us and you and your subs if you plan to serve as an owner builder. And so being part of that partnership, being a partner with us as we walk you and guide you through this process to get this home built, we want to get you exposed to the partners that we have within our industry, namely the lending partners that we have that we team up with. And I'm going to introduce our special guest in a minute that we have here to talk about financing. Before I do that, I wanted to talk about just a couple of things that we would recommend, a couple of tips that we would recommend before getting started on one of two phases. The first one's going to be kind of a pre-estimating phase. And it's really important before you start talking with us that you have at least an idea of what those budget goals are going to be. And you can get that budget goal if you're going to plan on doing financing for your log or timber frame home. You can actually go talk to Rural First or one of the lending partners about getting pre-qualified. Pre-qualified is just an exercise that gets a little bit of income and debt ratio information from you, gets just a little bit of information to give you an idea of what you can comfortably afford to borrow, what you can comfortably afford to finance, so that when you come to us and you say, hey, we want to build X home, and we have this much that we want to spend or this much that we've gotten pre-qualified for, we have an idea of how to help guide you towards that. If we're talking to a prospective client that's looking to get land and land improvements and build a home within a certain budget, it's really important that we know that. If we don't know what your budget goals are, it's really hard for us to help steer you and guide you in the right direction. Okay, so that's the first tip. If you're looking to get financing in place, actually closing, so pre-closing, Kathryn's going to tell you about getting a set of plans in place and getting a turnkey estimate, a good faith turnkey estimate in place for them to be able to go through their closing process. I'm not here to talk about financing today. I'm going to turn that over to the expert, Kathryn Greenfield, who's with Rural First. She is going to educate you on this. We're super happy that she's decided to join us today. We're a great partner with them. Kathryn's here today to talk about the lending process. So Kathryn, I'm going to turn it over to you and let you take it away.
Perfect. Thank you guys for having me. Again, my name is Kathryn Greenfield. I'm with Rural First. We are actually a division of Farm Credit Mid-America. So I'll go through that. We'll just go ahead and jump right in. I'm going to share my screen with everyone just so you can kind of see what I'm talking about. And we're just going to kind of go through the different types of loans that we can do. And once we get started, I'm going to first of all tell you where our territory is, and that's not going to apply to some of you, but that doesn't mean that you're not going to learn something from this, because I can at least connect you with other lenders or other farm credit associations in your area, and Matthew also has other lending partners as well. So don't be afraid, stick around. It's still going to be useful and educational for you. So give me just a second. I'm going to share my screen. All right, so can everyone see my screen? Thumbs up, yes? Okay, perfect. So let's go ahead and get started with who we are. So as I said, we are a division of Farm Credit Mid-America. Rural First is a relatively new brand. We were formed in 2017 when we saw the need to expand on consumer business. And what that means is the side of the business that does land with the intent to build, recreational land, homes, new construction, anything that's not going to be used for agriculture. We do still have that side. So, you know, if you have a working farm operation and you need financing for that kind of stuff too, we also still have that, and that's where our roots come from. But Rural First started with Farm Credit Mid-America. We're quickly expanding. Here's a list of the states that we are currently in. So Tennessee, Kentucky, Ohio, Indiana, Missouri, Nebraska, Kansas, Iowa, Wyoming, South Dakota, Texas, Illinois, New Mexico. We will eventually be nationwide. I'm not sure when that is. I would say probably within the next 5 or 10 years. But again, if you're not in those states, stick around. I can still help you and provide a little bit of education on financing in general. And then, you know, if you're interested in what we have to offer, I can connect you with other people in your area. So this is just a quick map of our territory. As you can see, there's parts of some states that we may not cover. And again, we expect for that to expand, but if you're in the 4-state, Ohio, Indiana, Kentucky, Tennessee, I can definitely help with any of those, and then any of the other green ones. So why are we different? As I mentioned, we are a division of Farm Credit Mid-America. So our roots are because of agriculture. We are an ag chartered lender, so we do things that are a little more out of the box. We don't have an acreage size limit. We do unique properties. So an example of that a lot of banks struggle with is, of course, log homes. That's why we're all here. Some of you may also find properties that, you know, maybe have a couple homes on them. They're large pieces of property, but they have 2 homes. One may be a primary dwelling, or, you know, you may have 2 guest homes or something like that. We can do that. Most secondary market lenders can't. And again, kind of circling back around to the acreage size, most banks are limited to comparable sales. We're not. If you want to build something on 400 acres, that's not going to be a problem for us. So we kind of specialize in non-conforming loans. It doesn't necessarily mean it has to be on acreage, but it doesn't necessarily mean that it has to be on something small. So these are the kinds of loans we specialize in, are things that are a little bit bigger and a little different. So again, this is kind of what we specialize in: large lots, recreational land, you know, land that has outbuildings and barns, horse arenas, hobby farms, any unconventional type loans. So I know right now a lot of people are doing the barn dominium thing. So if you happen to buy a piece of property that has a barn dominium or a barn that has living quarters and you want to buy that and build your log home on it, most banks are going to walk away from that and say, no, we can't find comps for that. We can't do that. That's fine. We can still do it. We can still get it done. So really, the more unique the property in question, the more we can help streamline the process to get financing for it. So let's just kind of quickly go through, and I'm going to try to keep this pretty quick so I can leave time for questions at the end, but I'm going to just walk through the types of loans that we can help with. The first one is lot loans. The reason I put this first is because you got to have something to build on. So what most people do, if you don't already own land, they'll go out and buy land and then build on the property after they own it. You can do them together. A lot of people will buy the land first, and then that will somewhat dictate what they build. So let's talk about lot loans first. So typically what defines a lot loan is land with the intent to build. For us, the property has to be outside city limits. So that kind of circles back around to that agricultural roots and agricultural chartered lender. We cannot lend inside city limits. We can loan up to 85% of the value, so of the appraised value or the purchase price on a fixed 15-year term. We can also stretch it out longer than that if you want to put a little bit more down. So our max is 25 years, 25% down. We are able to convert that to a construction loan later. For example, we've got some current customers that are working with Stone Mill and with us. We just closed one. They just bought 20 acres and they are currently working with Matthew to make their log home plans and get the cost estimates together. So then they're going to circle back to me once they have that and we'll get the construction loan going for the log home. You can also use equity in your land towards the down payment of construction. So this also applies for people that already own their land. So, if you own your land free and clear, maybe you've owned it for 10, 20 years, you can actually use that towards the down payment of your home so that you don't have to bring anything to the table. So this is what we go off of as far as lot loan eligibility. Of course, it has to be in the area of the map that I showed. But again, if you're a more rural customer and it kind of falls within these categories, there's farm credit associations all over the US. So even if it's something that we can't do, I can still connect you with other farm credits so that they can help you. So as far as lot loans are concerned, if it's less than 5 acres of cleared land or 20 acres of timber, the lot value can't be over $385,000. So here in East Tennessee, sometimes we see lot loans that are like, half an acre, they're on the lake, and they're $500,000. That kind of falls outside of our eligibility to where we can't do that. But again, we can help you get connected with somebody that can. And then max value of eligible lot is $1 million or $12,000 per acre. So that's just kind of a brief overview of how we do lot loans. Like I said, other farm credit associations are probably going to be very similar. So if that's something you're interested in, and you're not within that territory, still contact me and we can get you hooked up with somebody. So now is the one that everyone's got questions on, and that's the construction loan. So log homes are sometimes a little bit difficult for banks to finance, and that's because they're so different. There's a couple reasons for that. First is you've got the huge draw up front to put the logs into production, and then you also have a huge draw once the logs are delivered. A lot of banks don't like that because they essentially have a bunch of logs sitting there, and there's no house to go with it. So if something happens to those, they're not really comfortable with it. For us, again, that's a little more of a unique situation to where we don't mind. I actually just did one last week to where they delivered the logs. I met the driver on site, handed them a check, and now they're in the process of putting the logs on the foundation and getting it in the dry. So that's one reason log homes are a little bit difficult to finance. And then the other reason is most banks have to use comparable log homes in the area for sales. So when they do an appraisal, they have to have other log homes. Well, unless you're in a specific part of the country, that's usually not going to happen. Sometimes, you've got one or two here and there, but it may not be a very comparable comp. For us, we've got internal appraisers, and since we do have different guidelines, we actually don't have to use log homes as comps. We can use stick built and then kind of make adjustments and basically look at it from a common sense perspective and say, okay, well, we understand this is a log home. It may cost a little bit more, or it's going to be a little bit different. So we add an adjustment to that appraisal. So that's why log homes are a little bit difficult, but we have no problem with them. So as far as construction is concerned, the way we do it, we have one-time closing. It's a fixed rate. You've got a whole year for the project to be complete. And again, you can use equity in the land towards your down payment. For us and a lot of other banks, you do have general or self-contractor options available when you're doing a log home. And that's because the log home company is pretty much the one that's getting it into the dry. So if you've got some experience finishing out the inside, maybe you did previous plumbing work or electrician work, then, we'll allow you to do self-contractor. Again, we can do 85% financing on a 30-year fix, no prepayment penalties, and there's no acreage limit or maximum. Outbuildings and acreage are welcome. So as far as the construction process, I know Matthew talked about, what's the next step? Is if you're ready to start building, you want to start looking at plans and cost estimates. My recommendation would be, whether you come to Rural First or go somewhere else, call and get pre-qualified. And have a number in mind. Like if you're like, I really don't want to go over 500,000, just have something to start with and talk to your lender about getting approved for that amount. If you need to go a little bit over, a little under, that's fine. It's always easier to go down than it is to go up. So I would probably try to come up with a number that you're like, I absolutely don't want to go over this. So that's the first thing I would do. And then as far as pre-qualification is concerned, it's usually a really easy process. For us, it probably takes 5 to 10 minutes for you to fill out the form that we ask for. We just ask for personal information about income, and then look at your assets and liabilities, and that's it. Usually it's not a soft pull on or a hard pull on credit, it's just a soft pull, so it doesn't ding your credit. So that's what I would do if I was looking at doing construction. Definitely consult with a lender if you're looking at financing and see what the next steps are. They can help walk you through that. So as far as construction loan eligibility for us, it has to be outside city limits, and the home value, if it is over 385,000, so that kind of goes back to the way the lot is as well, it has to be located on 5 acres of cleared land or 20 acres of timber. So that means that we can do larger homes. That's not a problem at all. It just has to be on more acreage. So this is just a brief touch on recreational land. I know some of you all, maybe you're looking at building a log home further down the road, but right now you're trying to get the land bought. So that would fall more into the recreational land guidelines. If you want to buy it, use it for just pure recreation between now and then, that's what we would call it as far as the land loan is concerned. It's very similar to the lot loan. We process it the same way. It's just that the qualification is a little bit different. So again, this is intent to use for recreation. Doesn't mean you can't build on it. It just means that right now that's the primary intention. These are a little bit bigger tracts. So 10 or more acres of cleared land or 20 acres of timber. You are capped at $1 million. So if it's over that, we do have products for that, but I may have to send it to our ag loan officer, which again, we've got those products in-house and we can do that. Per acre value can't exceed $12,000, so very similar to the lot loan. So that's just kind of a brief overview of how we do the financing. Again, if you're not within this area, that doesn't mean I can't help. I can still try to connect you with the right person, or Matthew and Dawn, I'm sure, have some lender contacts in your area as well. So the main point is, if you're getting financing for your log home, it's never too early to start talking to your lender to see what their process looks like. So I will turn it over to Matthew and everyone else for questions.
Kathryn, thank you. Great presentation. A lot of great information for our guests. Hopefully that was helpful to everybody. I know it's a lot of information. It's a lot of information to absorb. And certainly that's why we want to provide as much time as we can to allow you to ask questions. Before we do that, I wanted to touch on a couple of things, in closing. And when we talk about, going into that process and being ready, just some final remarks is, as you can see from Kathryn's presentation, experience matters a lot. And experience in an industry that is very unique matters a lot. So my advice to you would be lean on the partnerships, lean on the experience that we have and the experience that our partners like Kathryn have to go through this process. That does not mean that your local lending institution cannot help you finance your home. That just means that they're probably not going to be as familiar with the steps in the process. And when Kathryn was talking about the upfront money, when we go through a process to build a log or timber frame home, we are prefabricating all of these components. So we have a significant amount of capital tied up into the design, the procuring of material, and the fabrication of the product before we ever deliver. When we actually deliver a home, we're actually upside down financially. Now, you're probably looking at me going, that doesn't make a whole lot of sense. And the reality is it doesn't. From a business standpoint, when you deliver somebody else's home and you've got money into their project as opposed to them using their own money, it's a different business model. And so we do that in commitments, and we do that when we call what we call fabrication deposits, where you're actually submitting a certain percentage of the project cost for us to fabricate the structure and then deliver it to the site. And then when we get on site, that's when our crews are actually erecting the shell and drying it in. And like Kathryn said, a lot of lending institutions aren't used to those down payments, those payments up front for us to prefabricate material. Because in the conventional industry, conventional construction industry, I mean, you're delivering framing lumber that's going to get field built. When we deliver our structure, it's already prefabricated, pre-cut, ready for assembly. So it's a unique build. It's very different. It's very specialized. And that's why I said, lean on our partners, lean on experience in our partnerships. The second thing is plan ahead and be vigilant. I know some of you have attended other lunch and learns that we've had, and I know we keep singing the same songs, but I can't say enough how important it is to be vigilant and to plan ahead. And like Kathryn was mentioning, get in there and get pre-qualified. Have a number in mind, but go in and start that process to figure out, what you can comfortably afford. If you're looking at 450,000, is that a number when it's financed that is going to suit you, that's going to be in line with where you are? So hopefully that information is helpful. We're going to turn the floor over to a question and answer session. In fact, I'm actually going to talk about something and ask a question to Kathryn to kind of get us started off, because when I'm helping prospective clients find property in this area, as well as Dawn, who is also a licensed real estate agent, when we're helping prospective clients find land, one of the things that sometimes gets overlooked is infrastructure on the property. Infrastructure meaning lot improvements, putting a driveway in, getting power in, getting water in, or putting a well in, putting a septic system in if it does not have city sewer or city water, which a lot of these rural properties, I can tell you right now, they do not have city water and city sewer. You're going to be on well and septic. In fact, a client of mine that I'm working with from yesterday, we're looking at 140 acres in a rural area. It doesn't even have power. So we've got to figure out how to get power to the property. He hasn't made an offer on it yet, but that's definitely one of the contingencies. So my question, Kathryn, to get us started off on the question and answer session is, in the lot loans, can you finance those improvements? Can you finance the cost of the driveway, the cost of getting power, temporary power to the site, getting a well and a septic system in? Or does that fall into the construction loan side of the loan?
So that's a great question. We can actually do it one of two ways. You can do it as part of the lot loan. It then becomes to where it's still primarily a lot loan, but you've got a small portion of it that's construction. So what we'll require with that is bids from your subcontractor, or maybe even power company that's going to put those in, and then we'll conduct what we call an as-will-be appraisal. So that means based on those bids and those improvements, we'll appraise the land and say, okay, this is now an improved property. We're paying this much money, or the customer's paying this much money to put these improvements in. So then it'll then become 85% of the purchase price, well, 85% of the appraised value, because then it's got those improvements in with it. So yes, we can do that as part of the lot loan. Or if you've got a customer that says, hey, I don't really need this until we do the construction loan, so then at that point we just wrap it in with the construction loan. So really you could do it either way.
Thank you. We get a lot of clients that, buy the property and they want to make some improvements, and they want to put a fifth wheel on the property and live in the fifth wheel while they're building the house. So they want that infrastructure in place. They need some water, they need some power, they need a septic system in place. So thanks for answering that question. So at this time, turn the floor over to our guest, and y'all just ask away.
All right, Matthew, I've got some questions here.
Okay.
So we have a question that's talking about any kind of grant programs or any kind of loan programs specifically for disabled veterans. Kathryn, do you all do any kind of thing that would help disabled veterans?
So we get this question a lot, and unfortunately we don't. The reason for that is we are a portfolio lender. So that means everything we do stays in-house. We're not selling it on the secondary market, which is where you get a lot of your VA loans. We already have our rates and our products at a base rate to where everyone kind of gets the same deal. But with that being said, with us being a portfolio lender, if you have something that needs to be done to your loan in 2 years, 3 years, 4 years, whatever, all you have to do is call a local office and we can get it done. So you always know where your loan is. You don't have to wonder, hey, I have to go through however many automated messages to get to the person I need to do. You just pick up the phone, call us, and we can take care of whatever you need.
Oh, that's a great point. So you all do keep your loans and service them. Okay, so
that's
a big thing right there.
Another thing that goes with that too, that I also didn't mention, because of that, we've got a special program. I honestly don't know of any other bank that does this. We can convert loans once a year through the life of the loan. So what that means is, a lot of people refinanced over the last year because interest rates were so low. With us, you can actually do that every year. You just pay a $500 servicing fee, sign 2 pieces of paper, and you're done. So some years it doesn't make sense because interest rates go up, but like I said, in like the last year we did a ton of them because so many people were saving money. And I mean, it's not uncommon for somebody to save $10,000 to $20,000 over the life of the loan just because their interest rate drops. So we can never extend the loan with that program, but we can always shorten it. We can always change the interest rate.
Oh, that's great. We have another question here, and we do get this question a lot. I will say I've heard this asked. So talking about an owner builder. Mm-hmm. So we have a question that says they're planning on contracting with a general contractor, but if that falls through, then they would certainly consider, being their own GC for their build. Can you go into any kind of detail on how you guys work with owner builders?
So yes, these are actually more common with log homes or, like I mentioned, the barn dominium, to where you've got a company or an individual putting it into the dry and then they take over. We are selective on who we allow to do that. Typically, like I mentioned in the presentation, you have to have been in the business at some point. So like drywall contractor, plumber, electrician, something like that, to where we understand that you've been down this road, you've done this before. More than likely, our underwriters are not going to allow you to do your own contracting if you're a W-2 wage earner and you work 40 or 50 hours a week, because their question is going to be like, well, when are you going to have time? A, B, what experience do you have that this is going to get done? And I also kind of caution people when it comes to self-contractor. I know everyone's trying to save money, especially in this market, but with self-contractor, a lot of people get in over their head. They think that they're going to save a whole lot of money because, they don't have to pay the contractor fee. And in some cases, you may save a little bit, but when you just start calling subcontractors.
Is there a particular phone number we should call to get pre-qual?
Yes, I'll answer that in just a second. But as far as self-contractors concerned, I just caution people when it comes to that, because you can quickly get in over your head. You think you're going to save money, but subcontractors, they usually give generals a discounted rate because they send them business all the time. They're also going to get products at wholesale prices where you're going to have to pay retail. So really, at the end of the day, you're going to be pretty far into it as far as the skill level that's concerned, and you end up not saving that much money. And like I mentioned before, you've got to do 85% financing on our typical general contractor loan. With self-contractor, you do have to put a little bit more down. It's the max we can do is 75%.
Let me piggyback off that a little bit, Kathryn. Great points. I do want to say that we're not advocating for owner builders or hiring a GC. We work with both. In fact, about 50% of our clients serve as owner builders. So we are very familiar with working with a homeowner who is serving as their own GC. What I would say is to echo what Kathryn said, in this market, owner builders, if you know what you're doing, if you've got experience in the industry, you know how to manage people, you know how to manage budgets, and you've got some experience doing that, you should be fine. And we partner with homeowners who are serving as owner builders. But if you're not experienced in that, and the other thing that you got to run into, or that you will run into right now, is general contractors are seriously super busy. This is a very high volume time. And so their subcontractors have been closely vetted out over time, and they are going to be loyal to the people that give them repeat business. So just make sure when you're serving as an owner builder that you have subcontractors that you can rely on, that you can trust, and that they're going to be able to take care of you when that time comes, as opposed to saying, oh yeah, I'll get to you. And then 3 months down the road, they're finally getting around to you because they've been trying to satisfy all their other general contractors that they do work for consistently. Time is money. And so there is a period of time that you have to build this structure if you're doing a loan, and you got to take that into consideration. That's the only point I wanted to add, not to necessarily scare you away from serving as your own general contractor, because we get a lot of people that do it. In fact, Kathryn financed a client of mine a couple of years ago who was a project manager for a commercial construction company. So he knew the industry. He knew the tricks of the trade. He knew how to manage people, line subs up, stay on budget, manage budgets. And it went extremely smooth for him. But that's not always the case with homeowners that just because they stayed in a Holiday Inn Express last night, think they can become a general contractor overnight. And so that's all I wanted to add.
And to go off of Matthew's point too, we did have one guy that it was extremely smooth, and actually because he had he was actually a licensed contractor, so we were able to do him as a GC loan, and it was perfect. But then on the flip side, we also had a guy that, he had done drywall contracting, and I think he was a plumber at one point, and he did self-contractor. It was definitely not smooth. We still got it done, but I think Stone Mill ended up pretty much being the general contractor in that situation, just because, it took a really long time and he was not very organized, and, it ended up being just fine. But I think Matthew had a few headaches from that one.
Yeah, and to to clarify, we did not serve as the general contractor on that one. We provided a lot of free consulting in that role, and that was not our role. And so it goes back to my closing remarks. Be vigilant, plan ahead, do your due diligence on the front end. Don't go into this lightly, and get started. The earlier you can get started on the planning process, the more time you have to get the design right, to get to the design specifically to your property, and to go out and take the time to get all the estimates in place and being vigilant on getting your numbers in hand.
Kathryn, one other thing, we do work a lot with people who already own land. So let's say that, we talked about getting, a lot loan or a land loan. So what if they already own the land? Then can you use that as their down payment?
Yep, absolutely. Ideally, your land appraises for enough that, we can loan up to 85% of the total value. So technically that means it would be worth at least 15% of that overall value. So those are actually my favorite, because I have good news and say, hey, you don't have to bring any money to the table. We can wrap in closing costs and we can do down payment all together. So we have a lot of those customers, or in some cases, maybe they bought their land, financed it through us a few years ago, they've paid it off or even made improvements to it. Then we'll, reappraise it when we do the home. And at that point, we'll determine, okay, here's how much you have to bring to the table, and hopefully it won't be anything. So yes, if you're already on your land, we can definitely use that towards the down payment of the home.
That's great. We also have a question from Robert. He wanted to know, he's building in Arizona, and he said, is there a lender there that you could recommend?
I would say get with me afterwards. Dawn and Matthew will provide my contact information. I'll look up the Farm Credit Association in that area and see if that's something that they could do. If not, I'm sure that there's other lenders that Matthew has that he could recommend as well.
Yeah, we do have lending partners. Kathryn is one of several. Certainly, we are looking to refer our lending partners that we've got a lot of experience with. Kathryn is one of those. There are several others. And so if you want to contact your sales consultant after this and say, hey, can you send me a copy of your lending partners? We can send that out to you as well. And that will have Kathryn's number. And then there was a question earlier in the last one about what number to call. Is that just going to be your number, Kathryn?
Yeah. Yep.
Okay.
I think Dawn just provided it in the chat box. My cell phone number is the 299-3637. So, you can call or text me, either one. And then I think my email's on there as well.
What other questions, Dawn?
Okay, so we have a question from Joseph. He said it was mentioned about 5 acres of cleared land. I didn't understand if that meant it needs to be more than 5 acres.
So yeah, that I know that always gets a little confusing. So if your home value is going to be over $385,000, and that's just the home itself, that's not counting infrastructure, so water, electricity, anything like that, just the value of the home. Once we do the appraisal, if it's going to be over $385,000, it has to be on at least 5 acres of cleared land or 20 acres of timber, if you don't have some kind of farm income otherwise. And I know that's kind of few and far between. So usually the rule of thumb is has to be on 5 acres of cleared land or 20 acres of timber if the home value is over 385. I know that sounds like a really arbitrary number. It's just because we are a little bit different. We don't do the same thing that secondary market banks do. So we have to kind of stay in our lane. And that's kind of the number that we've been given. It has to be, if it's under 385,000 and you're on less than 5 acres of cleared land or 20 acres of timber, you're good if you're outside city limits. But if it is over that mark, it does have to be on some more acreage.
Okay, so so you're saying cleared land, what is that? Does that mean there can't be any trees? Or?
Essentially, like if you got a few trees here and there,
Pasture.
that's fine. But yeah, pasture. That means it's not going to be woods or forest or anything like that.
Okay.
And the reason we have that rule is we consider you, even if you never have any intention of farming, we consider you a part-time farmer if you have 5 acres of cleared land or 20 acres of timber, because we consider that property capable of producing gross farm income.
Gotcha.
Do you pull that off of a survey or do you look at the tax record for that ratio?
I usually look at the tax record, and in Tennessee, all of our tax records are online, and I have a really cool tool to where I can measure out acreage to see what's pasture and what's not.
Yeah.
Awesome. We have another question. How flexible is Rural First with the construction draw schedule?
We are actually super flexible because we use this program online. It's called Built. We started using it about 2 years ago. So you and your general contractor are going to have access to this. You get login information, and either you or your contractor can request draws. So technically, I mean, you can draw as many times as you want. We do inspections at 25, 50, 75, and 100% completion. So, you know, if you need $10,000 to do foundation work, you know, we'll do that. If you're at one of those inspection points, it does take a couple more days just because we have to send out a third-party inspector. They inspect, take pictures, upload a report, and say, hey, this is where we are in the process. Typically, we like to stay within about 5%, 5 to 10% of progress. With log homes, we do understand that that's going to be a little upside down on the front end because you've got the logs delivered in the beginning. So the other thing with draws is I know a lot of people, especially if you're doing self-contractor, they want the money up front. We can't do that. We can only disperse on what's been completed. Let's say that you've had log or floors delivered or something like that to where you've paid a large amount of money, but they're not installed. We can disperse part of the money for that if we can see that they're there, but we may not be able to disperse all of it because they're not installed yet. And the reason behind that is if something happened and, you know, we had to foreclose on the property and we were really over dispersed, then we're really far into that project and it's not worth as much because it's not as complete as we thought it was.
Does anybody else have any questions? It looks like that's the last question on my list over here. I was trying to think if there was some other typical questions that we get asked.
Yeah, I was going to ask a question. You know, you talked about how you're very ag specific.
Mm-hmm.
Does the property have to be zoned ag, or
no?
You might have a larger tract of land that's actually zoned residential, but it doesn't have to be zoned ag, correct?
Nope. No.
Okay.
The only thing that we kind of struggle with is if it's commercial.
Yeah.
Even then, like, I'll just send it over to the commercial side if it's something that he can do, and we'll see what we can do with it. But that's the only one that gives us a little bit of heartburn, but residential or ag, that's fine.
Another dumb question from me. So you talked about that $12,000 per acre max.
Mm-hmm.
That's based on the appraised value?
Yes.
That's a market appraised value, not a tax appraised value, right?
That's correct. And there is some flexibility to that depending on the market. And I'll give you an example just to kind of clarify that. And this is just on raw land. If it's a home with, you know, a bunch of acreage that and it appraises for $25,000 per acre, that's fine. If it's a primary dwelling, we can do that all day long. It's when you get into more development type properties. So, you know, something in West Knoxville or just outside of West Knoxville, if it's $25,000 an acre, that's more. The highest and best use of that property is more for development, not for construction of a primary dwelling. The example I had to where we went a little bit over that, I've currently got a customer, he's buying 71 acres in Loudon, and it's just raw land. The appraised value is roughly $16,000 per acre. The highest and best use is still agriculture, but because of that market and because of his intention, we know it's still going to remain agricultural property. It's just, he's not buying it to develop it, in other words, but we made that exception just because of what the market looks like in that area.
Good. Well, and that's so true because right now it's a seller's market. You know, I'm looking at larger tracts of land for prospective clients. And a lot of them are listed at well over 12,000 an acre, and they're getting full listing price or above. And the appraised value will come in at over 12,000 acres. So it's great to hear that you kind of take it somewhat on a case by case basis, especially given the market that we're in, being such a seller's market that we haven't seen in a long time.
Right. And that applies more to recreational property. Obviously, if you've got 5 acres and it's appraising for $25,000 an acre, that's really not that uncommon. We're talking more like large property, large acreage tracts that could potentially be being purchased for subdivision use or something like that.
Right. Awesome. Any other questions, Dawn? I think Mr. Wingo has a question. He's raising his hand. Is that in the chat box, or
It's
you want
not
to?
the chat box, but if he wants
Okay.
to unmute, he can go ahead. You got
Throwing
a
his hands
question,
up.
James?
Can you hear me?
Yes,
Yeah.
sir.
I can hear you.
Okay, I typed it in. I typed it 3 times. I don't know how to make it go. So anyway, I've got a lot in Townsend. I don't have a lot of land, but it's outside the city limits, and it's valued at $30,000. Would I even qualify for any of this since I don't have like 5 or
Yeah,
10 or 20?
potentially. How much are you planning on spending on your log home? And obviously don't give me specifics, just, give me a rough estimate.
I'm hoping for 250 or less.
Yeah, so that's perfect. You're under the 385, so we can definitely do that. And if you own that land outright, we can actually use it towards the down payment.
Even though that's valued at more than the 12,000 per acre, because it's less than an acre.
Yeah, because it's not a large piece of property. You're just talking a small lot. So we understand that those are going to be valued a little differently. Usually the smaller the acreage, the more it's going to be priced per acre. So that's why, if you're buying it as recreational property and it's 10 acres of cleared land and it's valued at, I don't know, $50,000 per acre, that's probably going to be more development type property. So again, we kind of look at it as a case by case basis. But that's just kind of the general rule of thumb. In your situation, you would be absolutely fine. We could do that.
Yeah,
Well, I give 30. I give 30 for it, and I give 20 for it, but it was valued at 30, and the guy told me I could go to the courthouse and pay less on taxes, but they said they valued it at what it's valued at, just like there's property. So it's valued at 30,000, and I can't get around that. So as long as
Sure.
Yeah, you kind of cut out on us a little bit there, Mr. Wingo. Did you get all that, Kathryn?
I think so.
Okay. Yeah, it's an interesting market. We're closing today on a third of an acre. The closing price is $95,000. You do the math on that, 95,000 for a third of an acre. It's well above, above, and the tax appraisal on it is not even anywhere close to that.
Well,
but it's in downtown Gatlinburg, walking distance. I mean, it's great location, and it's just an incredible seller's market.
And even in a situation like that, if it were not located inside of Gatlinburg, if they were building something that was less than 385,000, we could still do it.
Yeah.
We have another question here. As someone seeking to finance a lot, then improvements, then construction, what should I try to qualify for? The lot or the total house and the land and improvement cost? So I guess that's a good starting point.
Yeah, that's a really great question. Honestly, we may even just do 2. I guess it depends on when you want to do construction, but I guess I would probably say, let's look at doing all of it. Because, if you can qualify for the whole construction and land together, then you can qualify for only part of it. So I guess short answer is I would say, let's look at pre-qualifying for the whole thing. And then, if you find a lot you want and then you want to do construction, like do a construction loan later, then we can always drop that amount.
I really like that question too, because it kind of ties into a point that I was going to make before we closed. And that is, if you're a first-time guest on one of our lunch and learns, feel free to go back to our YouTube channel and look over some of our other lunch and learns on topics like cost estimating, budgeting, because that question goes along with a project budgeting lunch and learn we did a few weeks ago, where we talked about those 3 different categories: your land improvements, and the cost of building. You're going to have the land improvement cost no matter what you build, whether you put a double wide on the property, whether you build a custom log or timber frame home, or whether you do stick and brick. So a lot of times clients overlook the cost of those improvements, and those have to be factored in. It's so essential because each lot is going to be unique to itself. Some lots are going to have less expense on putting improvements in, and some are going to have more. If you got a large tract and you're trying to put a half of a mile or a mile long driveway into it, and you're trying to get power and water from the road back to where the building site is, you're going to have a lot more expense in improvements to the land than somebody that's on a 2-acre lot or an 1.5 acre lot, and they're building right up next to the road. So really good question that was just asked.
Matthew,
Well,
and a question for you as well.
For me?
Yeah.
To echo that point that Matthew just made too, the last thing we would want to do as a bank is say, hey, you're kind of maxed out on the lot. We're not going to be able to do much for your construction. So we want to make sure that we get you prepared for the whole thing, because that would not be very fun news for me to deliver if you tell me after it's already closed, hey, I want to do a construction loan now, and then you're not qualified for it.
Yeah, that's a good point. Matthew, we have a question from Nathan. He says, question for Matthew: who would we contact in your company for quotes on both building a cabin and improvements on the land? And he is here as one of Mike's guests. So,
okay. So where is the property located?
It's going to be in Jamestown, Tennessee.
Jamestown. Okay, so that would be a question. So let me just give you a quick explanation. Stone Mill Log and Timber Homes, we specialize in the design, fabrication, and construction of the unique log and timber frame components. So we project ourselves all over the country with our crews doing log and timber shell construction and what we call dry-in, where we're getting the roof to finished underlayment, the porch roof to finished underlayment, but we're not the licensed general contractor. We're not the GC for the project. So if you're building outside of typically a 50-mile radius of Knoxville or about an hour drive, we're going to serve as a subcontractor to the homeowner if they're serving as an owner builder, or to the general contractor who would put in foundation work, subfloor, porch deck framing. We would build the shell, dry it in, and then the general contractor would finish it out. So if we're building a project in the Middle Tennessee area, we're going to be partnering with a local general contractor over there who either will be found by the homeowner or somebody that we might refer, and we're going to be a subcontractor to them for the unique components. Now, for those of you who are building in Tennessee, in East Tennessee specifically, and within about a 40 to 50-mile radius of Knoxville, within about an hour's drive, you can actually contact Peloton Construction. That is actually my business partner and my brother-in-law. Again, we're a 2nd-generation family business. He has a general contractor's license, and he provides that turnkey construction service as an extension, as an extended service to our stone mill clients. So if you're building a stone mill log and timber home, building a shell with us, he can talk to you about the turnkey construction process and that service. And your sales consultant can give you his information. Again, if you're building in Jamestown, that's probably a little bit far out of that range. We may have some builder referrals that we can give you over in that area, because we built for the last 47 years, all over the country, specifically all over East Tennessee, Middle Tennessee, the Cumberland Plateau. So we'll have contacts over there as well.
Yeah, I would definitely like to get a contact if you have one by any chance, because down here in South Mississippi, it's kind of hard to get information about that up there.
Yeah, I understand. And again, reach out to your sales consultant. They can give you a list of builder partners that we have in specific areas. If we don't have a specific general contractor, we may have some homeowners in that area that we can refer you to, and then they may be able to give you the name of a GC. I mean, we're certainly trying to connect the dots by helping you with some of these partner referrals. Kathryn is a great example of that. For those of you who are looking to finance, we're trying to provide you with one of our experienced partners that can help you through that process.
Well, and as far as the GC is concerned too, I sometimes have contacts with GCs that'll do lock homes as well. So occasionally I have ones up there as well. So if you can't find somebody, also reach out to me and I might be able to help you with that as well.
Thank you.
Dawn, any other questions?
No, that was the last question. So,
Okay. Hey, well, I can't thank you enough. We're at 12:57 according to my clock. Just thank you for your time, for the time that you've given us today to learn more about financing and to learn more about our company. Dawn will send out the presentation. Do you want to give them a little information on that, when that will typically happen and how that will come to them?
yes, I'll send you guys an email with the presentation. It'll be attached as a PDF. I've recorded the presentation. So if you want to go back and rewatch it, I'm going to put it on YouTube. And I will also send you Kathryn's information as well. So just, I'll try to get that out by Monday. Usually it takes me a day to turn it, and Fridays are crazy. So I'll get that to you guys on Monday. If you don't receive it, it may have went to your spam. Don't hesitate to reach out to your sales consultant or to me. Just let me know, hey, can you just, send it to me again? If I send it through Outlook, sometimes it comes through better. But it will be on YouTube. I will send out the presentation, and I'll send you Kathryn's information.
Yeah, and feel free to, watch all of our Lunch and Learn presentations, our Tip Tuesdays. There's a lot of helpful information, and that's one of the things that we take a lot of pride in as a company, is the way that we try to educate our prospective clients and the way that we try to educate our homeowners. We even do homeowner enrichment events. When you become a Stone Mill homeowner, we want to make sure that you continue to have a great experience with your home. And so we talk about maintenance and things like that, how to properly maintain your home and when to do it. So use these tools, use these educational resources to the best of your ability. And please lean on us anytime that you have questions. Reach out to your sales consultant if any questions did not get answered. And we just greatly appreciate your time today. We hope everybody has a great weekend. Stay safe and healthy in the process too.